Howdy there, folks. Welcome into today's video. Oh, baby, do we have a lot to get into today. It is a very special day indeed, because we have a whole bunch of big earnings coming after the bell here, and I mean a whole bunch. Woo! As in, look at these guys we all got coming after the bell here. Mr. Softy, the second biggest market cap company in the world. Google McDougal, certainly one of the biggest market cap companies in the world. And Visa, right? And obviously, we have other stocks as well, right? Texas Instruments, an interesting one. We also have to look at some of these earnings that came out earlier. Woo! Man, it's a busy one, folks. It's going to be a busy live stream today. Ooh, is it going to be a busy live stream today? I'm going to take a peek at what's going on out there here today. So, looks like big tech's having a decent day. It's certainly not a great day. I mean, you know, the best stock in big tech today is up 2.6%. That's a little bit of a sleepy day for big tech. I think everybody's waiting till after the bell to kind of make their moves, right? I think that's what the market feels like in the trading day here today. It's like everybody's just kind of waiting here. We're maybe a little bit optimistic, but everybody's like, let's see what Google reports. Let's see what Microsoft reports. Because what people are going to say is, okay, Google McDougal comes through and smashes it. Guess what? Meta smashing it as well. By the way, we released a bunch more new emotes. So if you guys haven't seen the new emotes out there, there's new emotes. Those are some fun ones I got on there. We got a carp one. We got a Tesla Maesla one now. I believe we even have some animated emotes. So yeah, if you guys know what you're doing on Twitch, you know how to find that sort of stuff. So yeah, if Google comes in, and obviously if they go the other side, let's say Google's earnings are really bad or guidance is bad, right? That's going to weigh down Meta, because a lot of people are going to assume, oh, Meta's earnings are going to be bad tomorrow, or their guidance will be bad, or something like that, right? So that's what today feels like. Looking at big tech, is everybody's just kind of waiting. Everybody's just kind of like, I don't know, we'll see what happens here. I don't know, but that's the way the market feels like here today. Let's see what's going on with a lot of my stocks in general today. So, some of the smalls are flying today. A lot of those smalls got hit hard yesterday, though, so they're just basically kind of having a bounce back day, like Honest and Fubo. Corsair certainly fits that category. Elf having another good day here today. Elf had a good day yesterday as well. So Elf, obviously I had a tremendous year. I'm expecting more tremendous years out of Elf in the future. Palantir is having a pretty good day here today. I can't wait for Palantir's earnings, by the way, folks. I cannot freaking wait for Palantir. Hey, some people are using the new emotes. There we go. Oh, gosh. Hey. Somebody asked me, what did I think about Meta and the whole situation where 33 attorney generals coming after them? I don't know. It's a crazy thing, because if you're going to come after them, you better come after Netflix. You better come after, TikTok. You better come after all these guys. Like, I don't know. It's a wild situation. If we look, Wynn's having a pretty good day here today again, up 2%. Tesla having a bit of a bounce back. That's a good thing to see Tesla's bounce back here today. You can't get too excited about it, though, to be honest. 1.7%. I wasn't, I kind of told you guys I wouldn't be surprised if Tesla kind of bounced back a little bit this week, just because if Meta reports good, Google reports good, Amazon reports good, it's going to help the whole Qs, right? If it helps the Qs, it's going to help the SP 500. If it helps the SP 500, it's going to help Tesla in the end, because Tesla's part of the Qs, Tesla's part of the SP 500. So it kind of, and it helps a little bit of a bounce back there, but that doesn't mean it can't still go lower in November and December, which is certainly a possibility and something, everybody should be prepared for. PayPal, decent day here today, back over 54. Amazon, everybody's kind of waiting on those earnings later this week. TLT, I don't even have TLT. That's supposed to be up in here, because I don't own TLT. So TLT goes there. TLT is up here today. SDOW down today, because the Dow's up. So let's see here. Coca-Cola in charts, 8% year-over-year revenue growth. Wow. Fueled by 24% surge in Latin America? Holy smokes. What is going on with Latin America in regards to Coca-Cola? Jeez. Wow. Yep, 8% year-over-year, so that's the strongest quarter they've had in quite some time here. Latin America, that's crazy growth, 24%. But back here, they actually grew 41%, though. So everybody in Latin America, don't fall for it, man. They're going to make you addicted to that Coca-Cola. Don't fall for the Coca-Cola, man. Come on. So Coca-Cola non-GAAP EPS of 74 cents, beat by 5 cents. That's a pretty respectable beat if they beat by 5 cents on EPS. That's a non-GAAP basis. So revenue, wow, the revenue they beat by $580 million. It's a nice beat. So that goes back to, at the end of the day, what did you see in Pepsi's earnings? Pepsi reported freaking phenomenal earnings. Those earnings were tremendous out of Pepsi. So if Pepsi reports phenomenal earnings, there's a decent probability Coca-Cola is going to report very good earnings as well, right? This is what I told you guys, and sure enough, Coca-Cola came through and reported really good earnings. Stock's only up 3% because Coca-Cola doesn't move big like that, but at the end of the day, if Coca-Cola is doing bad, Pepsi's doing bad. If Pepsi's doing good, Coca-Cola's doing good. These stocks just kind of run together a little bit. If a Solar Edge is doing bad, an Enphase is probably doing bad, right? That's just the way it is. Let's go ahead and take a peek here at Hype Train. I want to take a peek at Enphase. Oh, where did I put Enphase? My housing stocks watch list. Enphase still going lower. Even today with a lot of green out there, Enphase going lower. $95 a share here today. Everybody's very nervous going into these Enphase earnings. Enphase comes out on Thursday, so make sure you join me for Thursday's live stream. Well, next 3 days are just crazy, but Enphase, it's a big one, folks. I don't know, man. There's some people starting to predict Enphase is going to hit $50. $50 before it's all said and done and the stock finally bottoms out. Jeez! Who are you more bullish on? Because obviously two big dogs reporting after the bell here. Who are you more bullish on for these earnings after the bell? Microsoft or Google? They're very different business models. Who are you more bullish on after the bell? Microsoft or Google? Really interested to hear what you guys have to say. My personal opinion is Microsoft's one of those companies you just know they're going to put up their numbers. They're going to put up their numbers. They're going to put up their numbers. It's going to be good numbers. They almost never oh my gosh, what happened to Microsoft? The business is falling apart. That Microsoft's not that company. They always put up good, solid numbers that you're like, Microsoft, man, they're there every time. Google McDougal is usually a little bit of a bigger risk because their business model is built upon so much advertising, right? But I will say Google has more upside. So let's say bull stocks pop. I would expect actually Google to pop significantly more than something like a Microsoft. Because the chances Google shocks us with wow, can you believe the number they came up with is decent. The chances Microsoft shocks us with some crazy number is very low because their business model is so practical. And they just, solid, just continue to collect the money, teams and all that stuff. Let me see what you guys are kind of saying here. You guys are saying, so a lot of people more confident in Microsoft, Mr. Softy, it definitely feels like. Definitely some people are confident in Google here after the bell. But it seems like a lot more of you guys are confident in Microsoft. And I think Microsoft's the safer one to be confident in, I'll be honest. But once again, it has the lower potential upside in my personal opinion. Somebody asked, what did I think of 3M earnings today? I'll have to look at 3M earnings and take a peek there. So somebody says, Google started to charge for their Google Workspaces. It was previously for free. Could give them a boost. The problem is when a company let's say they make a product, all of a sudden, it's a paid product and it used to be free or something like that. With these companies, they're so massive that usually it takes years of ramp to be material to the numbers. Google's not just going to have something and it's already material to the numbers in the first few quarters or the first even year or two. Same thing with Apple. If Apple comes out, Apple, the VR headset, right? I'm sure they'll sell some of those. Who knows how many? 5 million, 3 million, 10 million, 15 million, who knows? But regardless of what they sell, it would actually not be very material to their numbers the first year or two. They need to scale to a massive amount to actually start to really matter in the business model, right? And so I think that's always something folks should kind of keep in mind there. Anyways, so in regards to Microsoft, I mean, it's always a great company. It's going to likely continue to do great for many years to go in the future, right? But, it's trading about 29 times this year's expected numbers and about 26 times next year numbers, right? We pull up something like a Meta, for example, right? Meta trades about 23 times this year's numbers and about 18 times next year's expected numbers, right? I do believe Meta is going to far outgrow revenue and EPS versus somebody like a Microsoft, for instance, right? So the question is, why would I put money in a Microsoft instead of just putting it in a Meta, right? A Google will probably be very comparable, my guess is, as far as, you know, as far as the money coming in over the coming year, in terms of the percentage bottom line growth as, let's say, Microsoft. But you look at Google, we're at 24 times this year's expected numbers and 20 times next year, right? Now you can say Google has government things going on. Microsoft could potentially have some of those in the future. I don't know, man. A lot of things to consider there. Now, somebody says government about to shake down all the big tech. It's certainly feeling like that, huh? It's certainly feeling like that. Like at this point in time, there's more companies that feel like they're getting shaken down by the government than are not, right? And the thing that sucks for those companies is it's not just about, okay, if you have to pay a fine or you don't have to pay a fine or you have to restructure this business or whatever. A lot of it also comes down to the lawyer fees. It's heavy legal costs, you know, when you get into it with the government like that. And that's what a lot of these big tech companies are having to go through and likely what they're going to continue to go through in the short term. It's certainly no fun. Somebody says Alibaba was at $80 recently. Looked like a great buy. Your thoughts on Baba? I don't like any of the Chinese stocks. None of them. I don't want any piece of Chinese stocks. A lot of it goes back to the way those companies are structured. You know, you hope you're buying ownership in those companies, but really you're buying ownership in some entity that's in some island in the middle of the ocean. You know, and obviously, you know, China hasn't really been able to be trusted over the last several years, just to be quite honest. So, no. Almost every single Chinese stock has been a huge money suck. Really think about it. Like, go through almost every Chinese stock and tell me it wasn't a money suck. Almost every single Chinese stock I can think of has been nothing but a money suck. Baba, Baidu, Neo, JD, like you go through almost all of them and they were all just big money sucks over time. They had periods where they went up, but ultimately they all just ended lower for the most part. And then I could go through a massive list of like smaller Chinese companies. Like I used to be invested in a company named Dang Dang. Dang Dang was an e-commerce company in China. And supposedly the business model was doing very well. Financials were really good, but ultimately, Dang Dang, when no Dang Dang where, and it was a bad stock, okay? Does it make sense to buy some long calls for the 3rd of November after Palantir earnings? How confident are you that the stock will go up? I'm looking super forward to Palantir earnings, but you got to understand if you're doing something like that, you're just more like taking a little bit of a gamble, right? If you're trying to bet that the stock price is going to go up in the short term. So I don't like to do that sort of stuff. At the end of the day, the more I look at it, the more it's just like a gamble if you're trying to bet like the stock's going to go up on this day. I tried to play that before. I tried that game, man. Even with companies that I almost knew down to the penny what they were going to likely report. And it was still a losing proposition because you got to understand like more goes into it than just like, oh, this company's going to beat and that means their stock price goes up. It also goes into the guidance. It also goes into what the feelings are around the market at that particular time. It goes so much deeper than just, I think this company's going to beat and they're going to report good numbers. It's going to go up. It doesn't really work like that. I tried that game back in, what year was that? I was really doing a lot of that. I think it was 2014, 2015, something like that. I thought I was going to be a millionaire by placing these earnings trades, and I would go on margin. I would put like $100,000 in a stock, $50,000 in a stock for earnings. That's like, they're going to beat. I know they're going to beat. Sure enough, they come in and beat. Stock goes down 10% because of whatever, guidance or who knows. Somebody didn't like the conference call. It was always something. And I was like, seriously? I just lost $10,000 today on this freaking earnings trade. Are you kidding me? What do I think about PayPal earnings? I mean, I'm very confident in PayPal's numbers for the next several years. So we'll see. I hope it stays down for, the next 2.5 months here. If it does, great. I'm going to continue to add as many shares as possible. I'll likely wrap up my buying in PayPal in the first quarter of 2024. So I basically only have a few more months of buying PayPal, and then that's it. So after I'm done buying, PayPal has my permission to start going up. Okay, that's all I'll say about that. Somebody says Ford and General Motors will not offer compensation for laid-off workers. UAW calls it strategic attack. When a factory is idled because of supply chain issues, companies typically give partial pay for non-striking workers. But in this case, Ford and General Motors said there's no such compensation. Interesting. yeah, crazy situations overall. Let me pull up big tech, see how we're closing here. Looks like a lot of green. A lot of green here today. Okay. We shall see how Tesla Maisla closes here. I'll bring up a few others. I'll bring up Enphase. I'm going to bring up Meta here. We'll see how all these kind of stocks go into the close. Google McDougal's, which is reporting after the bell, and then Mr. Softy, which is reporting after the bell, and also we'll pull up Visa, which is reporting after the bell. And we'll see how all these babies close here into the end. Everybody in the chat, does anybody own Google stock or Microsoft stock or both? Let me know in the chat, because I'm actually interested to know how many people actually hold one of these stocks that are about to report. If you own Google or you own Microsoft, you own both, let me know in the chat.
And that at least has been the consensus out there on Wall Street. So we'll see, but absolutely more competition, more pricing pressure, and then you've got the macro environment too that weighs on payment volume.
Yeah, you wonder if they're even sorry they weren't allowed to buy Plaid at those valuations, but we'll see how it goes, Kate. Thanks so much. Appreciate it. About 30 seconds till the close. We're going to be going out with about a 0.75% gain in the S&P 500. What is this 4250 area where we backed off from in the morning? NASDAQ slightly outperforming. We have oil prices in retreat, down a couple of percent today. As bond yields have quieted down for another day. We have the 10-year down to 4.82%. As we get ready for all those mega cap growth stock earnings, that's going to do it. The closing bell. We'll send it into overtime with Morgan Brennan and John Ford.
Live from CNBC's Technology Executive Council Summit.
Hey, the confetti? That's a little much. Did we have to do the confetti? Come on.
That is a scorecard on Wall Street, but winners stay late. I'm John Ford.
That's right, John.
CNBC's Technology Executive Council Summit in New York.
And I'm
That's
Morgan
right.
Brennan at CNBC headquarters.
Earnings time,
It's
baby.
a make or break hour for tech as Microsoft, Alphabet, Texas Instruments.
Hey, hurry up. We got to play our game, guys. We got to play our game before all these earnings start hitting. How much was a public count up or down today? Everybody that's here every day, you guys know this game we play. How much was the public count up or down today? No hint. I'm not hinting. I'm not telling you guys if the count was down or up for a hint. We'll throw it up on here on the screen in just a moment. Get in your guesses quick because these earnings are about to hit in the next like 2 minutes. So get in your guesses. Get in your guesses. Ooh, okay. Here it is. There it is, folks. $19,575 here today. Let me know if anybody got it. Oh, Microsoft's moving.
Last night, they did look a little bit better. So you had a number of large cap outperformance today.
Adam?
Yep.
Got to interrupt you here. Microsoft's numbers.
Oh, nice
out.
beat.
Stock is popping after hours. Let's go to Steve.
Nice beat.
Numbers, Steve.
Yeah, John, it's popping because of beats on the top and bottom line. Solid beats at that. Let's go
Very
to EPS,
nice.
$2.99 versus the $2.65 Street was looking for. Revenue is also a nice beat there, $56.52 billion versus the $54.49 billion the Street was looking for. Digging through the report now,
Wow.
get you some Azure numbers and other stuff to look at.
Huge beat. $2 billion on the top line. $2 billion.
Adam, I was just in the process of asking you about this. We have the stock, at least on this initial headline, moving higher by more than 5%. How much is this going to matter, once again, for the markets potentially tomorrow?
I think it's crucial. So I was saying the first week and a half of earnings season was underwhelming. The numbers that we got this morning were a lot better. And so I think the bar now has been knocked lower because of how the season started off. And if the results continue,
TI with a slight beat.
So far, obviously, we have to wait for the conference call and get guidance later tonight. But this is certainly going to be encouraging for the broader tape. And just mechanically, these names dominate the indices. So however they trade will have enormous impact on the broader S&P and NASDAQ.
Meta must be dropping because Google.
From Texas Instruments as well. Christina Partsinevelos has those for us. Christina. true. You're seeing a mixed
that's
report.
okay from
Revenue
TI.
coming in less than anticipated at $4.53 billion on EPS of $1.85. That was a beat. The street was anticipating $1.82, but the weakness is really coming from the Q4 outlook, which came in lower. The range for EPS and revenues both lower than what the street was anticipated. Just one line, the company saying revenue is flat, sequentially decreased 14%.
This is not good for Apple, guys. This is not good for Apple.
And industrial weakness broadened. So those are the two issues right there. Q4 outlook weak, mixed report, a EPS beat. Back over to you guys.
All right, Adam.
That's not good for Apple.
See senior markets commentator Mike Santoli as well. Mike, actually,
that's not good
I'm
for
going
Apple.
To you first. We just heard from Texas Instruments. The auto piece of that really got my attention, given what we saw with GM hitting fresh 52-week lows earlier today. Tesla popping, as you see. EV plans there scale back, and of course, impact of the strike. All right, we've got more earnings before we go there. Alphabet. Deirdre Bosa has those numbers. Hey, Dee.
Hey, Morgan. Alphabet shares, they are down more than 6% in the after hours, so it is a beat on the top and bottom line. Third quarter revenue coming in at nearly $77 billion, exactly coming in at $76.69 billion versus $75.97 billion. So a beat here. Also on the bottom line, EPS coming in at $1.55 versus $1.45.
You can't come in with these baby beats in this market. You come in with the baby beat, you're going to get a baby beat down.
Because I have them. $8.64 billion was expected in terms of revenue. $8.41 billion came in. That is a little bit of a miss there and could be the reason for some of the weakness. Remember that Google does not give guidance. We'll continue to dig through this and bring you more. Back to you.
Oh, man, we got craziness going on all over the place here, folks. My gosh, I don't even know where to start. By the way, I'm going to have all three conference calls going at the same time here in just a bit, folks. I'm going to have Microsoft, Google, and Visa conference calls all going on simultaneously, and basically I'll be switching back and forth between the three calls to hear, like if one is getting a little boring, I'm going to flip to the other call and try to hear the most interesting things that are being talked about on Microsoft, Google, and Visa calls all simultaneously, since they'll all be going on at the same time. So first off, folks, let's be very clear. Google's numbers were good. Regardless of what the stock price is doing after hours, Google's earnings were good. Changes in revenue, 11% up year over year. On a constant currency basis, 11% year over year, right? So really no currency help. Operating income came in at over $21 billion. Operating margin increased to 28%. These are very impressive numbers. Net income increased to over $19 billion in the quarter. Diluted EPS was $1.55. That compares with net income of under $14 billion in the same quarter last year. And so they're getting close to $20 billion. Very, very impressive numbers. As far as what the CFO said, he said the fundamental strength of our business was apparent again in Q3 with $77 billion in revenue. Imagine making $77 billion of revenue in a 3-month span. What? That's crazy. Like the numbers are just sometimes like so shocking. It's like $77 billion in 3 months. Like what? It's like $25 billion a month. Like that's just crazy. Crazy. With 11% growth, driven by meaningful growth in search and YouTube and momentum in cloud. We continue to focus on judicious capital allocation, that's an interesting word choice, to deliver sustainable financial value. So in terms of this, right, Google Search and other, $44 billion in revenue they did. That's versus $39.5 billion in the same quarter last year. YouTube ads came in at $7.9 billion. That's versus just over $7 billion in the same quarter last year. So YouTube ads, certainly not horrible, but that's not the best. Google Network came in at, actually, the numbers went down for Google Network, $7.6 billion versus $7.8 in the same quarter last year. So maybe that's one of those things that's giving people a little scare in regards to Google McDougal here after hours, which Google is down after hours. If we go ahead and pull up Google's stock price right now, we are looking at a stock that is down about 5% right now. I've seen it down anywhere between 4 and 6% so far in this after hours trading. If we go ahead and take a peek at Google advertising in general, $49.6 billion versus 54.4. So that's about a little over a $5 billion up number for Google advertising just on a year-over-year basis. So basically they're making about $1.5 billion more a month from their advertising business right now than they were at this same time last year. Google Other actually increased substantially about $1.5 billion. Google Services total came in at nearly $68 billion versus 61.3 in the same quarter last year. Google Cloud with a very nice number, $8.4 billion versus 6.8. If we look at total revenue, about $77 billion versus $69 billion in the same quarter last year. Total number of employees did drop for Google McDougal, folks. Total number of employees dropped down to 182,000 total employees at Google from 186,000, which does show Google's really watching the number of employees. They do not want an increase at all, it seems like, at least right now. So that is something that is very important. Operating income, Google Services came in with nearly $24 billion of operating income versus 18.8 in this same quarter last year. Very, very impressive number. Total income from operations, so they're still losing money in these other businesses. Well, actually, Google Cloud just flipped to profitability, folks. I think that's big. Google Cloud just flipped to profitability. They actually had operating income from Google Cloud of $266 million. That's versus in the same quarter last year, $440 million loss for Google Cloud. Other bets for the company was a loss of about $1.2 billion versus in the same quarter last year, just slightly worse. Corporate costs, they do have, let's see, in addition to Alphabet, it looks like probably some one-time expenses and corporate costs there. So total income from operations, $21.3 billion in total income from operations for Google versus $17.1 billion in the same quarter last year. So overall, pretty impressive. By the way, let's pull up Visa earnings. Here. Visa IR. I want to pull up their in-depth numbers. That's what I'm looking for Visa here. I'm sure they were tremendous. I'll accept your cookies, Visa. Give me all your cookies. All right, so let's see the earnings release here. All right, so Visa revenues, full year 2023? No, I just want to look at the most recent quarter. Revenue, 11% up year over year in this most recent quarter. GAAP net income up 19%. GAAP earnings per share up 22%. Non-GAAP net income up 18%. Non-GAAP earnings per share up 21%. Now, folks, what I really like about these numbers is when you compare them to the full year, almost every single one of those numbers is getting even better recently, which is a very good sign. It's not a weakening business. It actually looks like a strengthening business. The revenue is in line with full year, but the fact is net income on a GAAP basis is now growing faster recently than it was for full year. GAAP earnings per share growing much faster, 4 percentage points faster than it was for full year. Non-GAAP net income, 18% versus 14% for full year. Those are very good signs, folks. Very good signs for Visa overall. Visa's, obviously one of the most incredible business models in the world, no doubt about it. I want to see their overall financial statements. They might have, there we go. So let's see here. These are GAAP numbers, what they got up here. Revenue's up 12% on a GAAP basis. Services revenue up 12%. Data processing revenues up 13%. International transaction revenues up 10%. Other revenues up 35%. Wow. Other revenues are booming. Client incentives up 20%, right, which is a drag on the business. So net revenues up 11%. Total operating expenses up 13%. Not something you really want to see. That's not great. Net income up 19% overall. On a non-GAAP basis, total operating expenses were only up 9%. Okay, that's good to see. So maybe they had some one-time freak things that were in there or whatever. That might be, right? Net income up 18% on a non-GAAP basis. EPS up 21% there. If we look at payments volume, 9% on a constant basis. Cross-border volume, intra-Europe, 18% on a constant currency basis. Cross-border volume transaction up 16%, process transactions 10%. Visa. Very good numbers. If we look at Visa's balance sheet, cash and cash equivalents over $16 billion. Wow. Total current assets $33 billion. Total assets $90 billion. Total current liabilities $23 billion, so about $10 billion in the plus when it comes to current assets versus current liabilities. It's good to see. Total current liabilities, $51 billion. So basically, there are about $40 billion of equity there, somewhere around there roughly, right? technically 38.7. So very good. Very, very good balance sheet there. Let's see the billionaire tracker list, folks. Let's see it. Billionaire tracker list. Let's see what their net worths went up or down today. Let's see who we got to feel bad for. All right, folks, here we go. The world's real-time billionaires. Today, Elon Musk is a big winner chicken dinner here today. Elon Musk's net worth jumped $3.2 billion here today. Bernard, the Louis Vuitton man, he was up $3 billion today. Jeff Bezos, he's making way too much money. Jeff Bezos' net worth climbed $2 billion here today. Holy smokes. Larry Page's net worth climbed $1.8 billion, and Sergey Brin was up $1.7 billion here today. This man, I don't know how to pronounce his name, was down $300 million today. Hey, if you think you had a tough day, you could be down $300 million today. Michael Dell was down $342 million today. Zuckerberg lost $508 million today. Yeah, Meta stock was down a little bit. That is true. Thomas Frist, whoever he is, I actually don't even know who he is. He was down $751 million here today. So, yeah, folks, Jeff Bezos made $2 billion today. So make sure you use your Amazon Prime so you don't want to get all these Twitch ads, because that man made plenty of money here today, folks. Plenty of money. So Elon Musk is the by far and away richest man in the world right now, which is interesting. Louis Vuitton man's been dropping off his worth. Jeff Bezos I'm trying to think, if Bezos didn't get divorced, I think he would be number 2 right now. Number 2. By the way, you want to know something crazy? I don't know if you guys know this or not, okay? You want to know something crazy? I calculated the numbers one time. So if Steve Jobs was still alive today, and if Steve Jobs never sold any of his shares of Apple, that he was basically gifted over the years, like, back when he was with Apple the first time and when he came back to Apple, and he kept all those options over the years and things like that, Steve Jobs' net worth today would be around $500 billion. $500 billion. So, moral of the story is, if Steve Jobs was alive and he kept all his shares, it wouldn't even be close to who's the richest person in the world. Steve Jobs would be so far in front of Elon Musk and Bezos and everybody else, it would be just ridiculous, okay? So, anyways, just some food for thought there. I always found that very interesting. By the way, there's a guy that had an opportunity to invest in Apple back in the day, and he thought seriously about it. It was to invest a very small, minimal amount of money in Apple, by the way. If he had invested that money in Apple, he would be around the same net worth today as Warren Buffett. Instead, from my understanding, that man's not even a millionaire today. But he could have a net worth bigger than Warren Buffett. That's another wild one to think about. But anyways, crazy. We do need to pull up Google's conference call here and just put on mute.
Led again by growth in retail.
No way! Google conference call? Did they already start it?
12%, driven by both brand advertising and direct response.
They already started it?
Network advertising revenues of $7.7 billion were down 3%. Other revenues were $8.3 billion, up 21%, primarily reflecting growth in YouTube non-advertising revenues, driven by subscriber growth in YouTube TV, followed by YouTube Music Premium. TAC was $12.6 billion, up 7%. Google Services operating income was $23.9 billion, up 27%, and the operating margin was 35%. Turning to the Google Cloud segment, revenues were $8.4 billion for the quarter, up 22%. GCP revenue growth remained strong across geographies, industries, and products, although the Q3 year-on-year growth rate reflects the impact of customer optimization efforts. Google Workspace also delivered strong revenue growth, primarily driven by increases in average revenue per seat. Google Cloud had operating income of $266 million.
230
and the
Microsoft
operating
starts.
margin was 3%.
Perfect.
As to our other bets, for the third quarter, revenues were $297 million, and the operating loss was $1.2 billion. Turning to our outlook for the business, with respect to Google Services, First, within advertising. After a period of historic volatility, we were pleased with the year-on-year revenue growth of search and YouTube advertising in the third quarter. Second, within other revenues, in our YouTube subscription products, the substantial growth in revenues primarily reflects subscriber growth. Looking ahead, a full quarter of NFL Sunday Ticket revenues, as well as associated content acquisition costs, will be reflected in Q4 results, compared to only a few weeks in the third quarter. Play had solid growth in the third quarter, driven primarily by an increase in the number of buyers. With respect to hardware, there is a headwind to revenues in the fourth quarter, reflecting efforts to optimize the portfolio with tighter targeting of our go-to-market investments, as well as the ongoing impact from the difference in launch timing for the Pixel 6a and 7a that we mentioned last quarter. Turning to Google Cloud, we are pleased with the ongoing customer engagement with GCP and Workspace and the potential benefit of our AI solutions, including infrastructure and services such as Vertex AI and Duet. We continue to invest aggressively given the significant potential we see while remaining focused on profitable growth. In terms of expenses and profitability, we're pleased with our operating performance. As we have repeatedly stressed, we remain focused on durably re-engineering our cost base to create investment capacity to support our growth priorities, most important of which is with AI. We have a number of work streams in place. First, we are maintaining a slower pace of headcount growth, reflecting product prioritization and reallocation of talent to support our most important growth opportunities. Second, we remain focused on optimizing our real estate footprint, including how and where we work, to reduce our expense growth. As you can see from our earnings release, we incurred $207 million in accelerated rent and depreciation in the third quarter related to these actions. Third, we have engineering work streams underway to improve productivity across Alphabet. Given the magnitude of investment in our technical infrastructure, we have a superb team focused on efficiency of our operations there. We are also making progress in streamlining operations across Alphabet through the use of AI. Finally, there are ongoing work streams that are improving the efficiency of our spend with suppliers and vendors through our central procurement organization. And to be clear, across the portfolio of other bet companies, we have also been working to identify opportunities to create sharper focus and to operate more efficiently and effectively. With respect to sequential quarter-on-quarter trends, 2 further points. First, cost of sales in the fourth quarter will reflect both higher hardware costs given Pixel family launches, as well as increased CAC for YouTube, as previously noted. Second, as usual, we expect sales and marketing expense.
CAC, customer acquisition cost. Customer acquisition cost.
Finally, our reported CapEx in Q3 was $8 billion, driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers, reflecting a meaningful increase in our investments in AI compute. The growth in reported cash CapEx in Q3 is somewhat muted due to the timing of supplier payments, which can cause variability from quarter to quarter. We continue to invest meaningfully in the technical infrastructure needed to support the opportunities we see in AI across Alphabet and expect elevated levels of investment, increasing in the fourth quarter of 2023 and continuing to grow in 2024. In closing, we remain very excited about the opportunities ahead and committed to deliver sustainable financial value. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been asked. And our first question comes from Brian Nowak with Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have 2. The first one, maybe somewhat of a jump ball. There's somewhat of an investor debate about sort of the incremental return on capital to search when it comes to AI. I know it's early, but are there any examples that you're seeing with SG or Bard on higher utility, higher conversion rates, more engagement, just something to sort of show signal around the return that could come from these investments. And the second one, Ruth, I know you've spoken a lot about durably re-engineering the cost base. I think in the past you've talked about how expenses could grow slower than revenue in 2024.
Let's get the recaps here for anybody that missed it.
Trends that we've seen over the last several quarters. Azure cloud growth accelerating again, up 29%, also versus the 26% growth the street was looking for. That's exactly what investors wanted to see after several quarters of declining growth. Now, what to listen for in the earnings call? Does Satya Nadella believe Azure bottomed and will continue that acceleration, or that we saw last quarter, or is it just going to stall again? Now, look, let's go to Windows. This is also interesting. OEM revenue was up 4%, returning to growth, but keep in mind, comps are much easier compared to last year. And I'll say it before the folks here at the desk can say it, wait for that earnings call starting at 5:30. That's when Microsoft gives some outlook for the quarter, and you should especially listen for commentary on demand for Copilot. That's the AI assistant Microsoft's going to start selling a week from tomorrow. I'll be back right here, guys, with more if we get some of those details on the call.
And we were just discussing the wrinkle of the conference call because last quarter we did see the stock move lower.
On Copilot.
On Copilot after the show, and the company finally gave guidance because this is going to be the key. If Microsoft gained a lot this year on the hopes, on that AI pixie dust that we've been talking about, we want to hear that because there's a lot of talk about the installed base, adopting its AI programs.
Listen, in that last quarter, and that last piece of guidance back in July came at a time where they just announced the pricing of Copilot, right? And so next week they're going to have an event. They're going to be talking about this, and they're going to basically start to guide to this when.
It's my favorite Tesla bear, Mr. Dan Nathan. Let's be clear. Microsoft freaking just killed it. They killed it, man. Microsoft reported a phenomenal quarter. By the way, Google McDougal also reported a very good quarter, right? Extremely good. Pretty much beats across the board for Google, but market didn't like it enough. And Microsoft came out with stellar earnings. You couldn't say anything bad about Microsoft earnings.
For Meta, it's going to be interesting to see too. I'm really curious about what's going on with Threads and how that's impacting their business. Because I think that's a place that's
minimal to no impact as of right now for Threads.
Like just trade these names like in the last 3 months. When Amazon reported AWS last July, right? Or it was early August, I think. Like the deceleration wasn't as great as people expected. The stock popped on better than expected retail. Okay, and then Microsoft sold off because there was and then this one now is down 7% after this had a big gap. Remember last quarter because it was better than expected. I think we just have to these hyperscalers. This is it. Like there's no one else. I mean, Oracle's going to try, IBM's going to try, some of these others are going to try. This is what you have to play with, and I think that if each quarter you're going to trade them because one takes 2% of share from the other, this and whatever. I don't think that's how you trade this thing. And I think just to put this point, and you guys both made this. Google Alphabet has the best valuation support right here. We expected like 20% EPS growth next year and double-digit sales growth. And again, if their margins are expected to decline, year over year a bit, that is what they're telling you because the cost of compute to integrate this generative AI into like all of their, whether it's their productivity tools, whether it be search or whatever it is. So I think you have the valuation support here that you don't have in Microsoft. And I actually would probably rather bet on Google able to iterate and really, do a better job over and really commercialize products better than Microsoft would, because I don't know about you guys, like Microsoft's not the product that you want to go home with and use it on they don't have personal devices for the most part. They don't have all this other stuff. And Google is so ingrained in all of our online behavior here. And then you think about their ability to do it in YouTube and all these other things. So to me, I think that, Google, if it goes back and fills in that gap towards 122 is where it was last July when it reported, I think it's an easy buy right there.
All right, for more on Alphabet and Microsoft earnings, let's bring in Fast Money friend Gene Munster of Deepwater Asset Management.
Oh,
Gene, good to see you. Is Microsoft's quarter as good as a stock pop? Is Alphabet's quarter as bad as a stock decline?
No, they're both freaking good.
We'll start with Google. I think investors should just take a deep breath. We put a lot of pressure on that Google Cloud number. The deceleration, understand that's caught people's attention from 28% to 23%, while Azure had that step up in growth from 26 to 29%. But the deep breath piece of this is just looking at the aggregate of what is in front of Google over the next decade. They essentially are losing share in cloud right now, in part because of Microsoft is optimizing OpenAI on Azure. And so they are gaining usage because of that. Google's answer to OpenAI is their new Gemini platform. That is, Sundar was talking about it on the call here the past 35 minutes, and that's their new, essentially, that's their answer to OpenAI. As that gets integrated, it'll start in the December quarter, and further new models, they said, will be announced in 2024. Microsoft will announce new models too. But I think that this scale will tip back towards Google, or more level playing field between Google and Azure, and we'll see a reacceleration. But most importantly, the reason why I think investors should ultimately view what's going on at Google as positive is they are investing more, but they're doing it judiciously. They are saying that, Ruth Porat is saying that they're going to grow earnings faster than expenses. And if this plays out in terms of how search is going to be impacted by AI, we're just at the very beginning of this. And I just want to fill in the final thought here, Melissa, in terms of why search is important relative to AI, is what Google wants to do is take what you use Google for today, that is for information, navigation, and commerce, and add on to that basically generative features. And so as they add that, you're going to go to Google more over time, and there's more opportunities for them to monetize search. And so big picture here, the Google story is intact. I haven't even talked about Microsoft because I'm just so surprised at Google's reaction here.
I agree, Gene.
Gene, it's Karen. Thanks for being on. So how do you think about the valuation of Google here, and what penalty or what do you put on the contra side for the DOJ lawsuit?
So I'm in Dan's camp. He was just outlining, the valuation perspective here. I think it's at the top of the most attractive. That's why at Deepwater we own shares of Google. It is, I think, the most attractive and probably the best position relative to the opportunity in AI. So, Karen, I think that the valuation is attractive. Second, in terms of just what's going on with, the risk related to regulation, is this catches headlines. It's an important topic, but ultimately I don't think much is going to change, and don't have the time to go through the game theory in terms of how this most recent piece is going to change relative to their ability to bid on placement within like Safari, for example. But I think I don't think it's going to, I think it will play out to be ultimately a net neutral for Google. And so these headlines will pass, and I think ultimately investors are going to focus on what matters most with Google, which is why they have a pole.
Yeah, Google, obviously the government stuff is going to be an overhang on the stock for quite some time. That's not going away short term. That's going to be a continued problem for Google to deal with next year as well. So that is something to kind of keep in mind. Obviously, the valuation looks incredibly attractive. The numbers look incredibly attractive from Google McDougal. Really, really good all around. It's just literally the only overhang. They're like, the cloud decelerated from 29% to 23% or whatever. It's irrelevant. The stock's trading at 18 times next year's expected numbers, or 20 times? Like, it's a really cheap number for a company that's growing at the rate that Google's growing at, right? And Google, at the end of the day, has always been an advertising platform. It's always, probably as long as we can see at least, it's going to be an advertising platform. The cloud, all that other stuff is just extra.
My book's that way, yes. Alphabet.
Julie?
Alphabet for sure.
Wow. Clean sweep.
All right, so what should they do? Go buy Microsoft.
Dang, everybody picked Google over Microsoft.
Conference calls. Meantime, coming up, we've got more after-hours action here. Shares of Visa and Snap.
Wow.
After their reports, the numbers from those.
Everybody picked Google over Microsoft. And it's not because Microsoft is bad. It's just like Google's has probably a more attractive valuation. Microsoft call is about to start here in just a few minutes, folks. We got the Visa call rolling as well. By the way, let me know in the chat. I know a lot of you guys own either Microsoft or Google stock. Are you guys happy with the earnings? Spam in the chat if you're happy. Happy Microsoft, happy Google, happy both. Spam it up. I would love to hear from you guys and kind of see if you're happy with the earnings. I thought both earnings were very, very good. But I'd love to hear your guys' opinion.
September, totaling 141% for the quarter, a 5-point improvement from Q3. We continued to see healthy travel volume levels in and out of LAC, Europe, and CEMEA, ranging from 145% to 165% of 2019 levels. Travel volume into Asia continued to improve, indexing at 128% to 2019 levels for the quarter, up 10 points from Q3, while travel volume out of Asia was up 7 points to 114%.
Ooh, travel out of Asia's up. That's good news. Somebody said they own them both, but they're canceling each other out right now. Yeah, they are.
Levels.
Google and Microsoft.
Travel volume outbound from the U.S. to all geographies continued to be strong, in the mid 150s, indexed to 2019. U.S. inbound travel recovery accelerated this quarter, pushing the index above 2019 levels for the first time, even as the dollar continued to remain strong relative to pre-COVID levels. Now let's review our fourth quarter financial results. Service revenues grew 12% year over year versus the 9% growth in...
Somebody asked, so let me put it like this, okay? Am I more confident or less confident in Meta earnings than I was an hour ago? And the answer to that is I am even more confident in Meta's earnings tomorrow than I was an hour ago. I was already incredibly confident about these Meta earnings going in, but seeing Google's numbers made me a next level of confident in Meta.
Excluding intra-Europe. Revenue growth lagged.
And by the way, it doesn't mean necessarily stocks can go up. I mean, Google's numbers were pretty freaking phenomenal, and that stock's down, 6-7% after hours? So it's not a guarantee just because they report really good numbers tomorrow that the stock's going up short term.
20%.
It probably is. Like I said, my guess is Meta ends this week at 335. That's my guess.
Growth was driven by stability.
And I wouldn't be surprised if it was 350 to 375. We'll see.
As well as strong growth in cross-border volumes. New flows revenue grew 14% in constant dollars. Commercial volumes are up 9% in constant dollars and up 156% versus 2019. Remember that revenue is recorded based on last quarter's payment volumes growth, which was 9% in constant dollars in Q3. Visa Direct transactions grew 19%, and as we mentioned last quarter, were impacted by a client that transitioned its domestic P2P transactions to an internal ledger system, and that was not meaningful to revenue. Value-added services grew 19% in constant dollars, driven primarily by strong advisory services, select pricing actions, and higher volume. GAAP operating expenses increased 13%. Non-GAAP operating expenses grew 9%, primarily due to personnel expenses from growth in headcount, and FX had a nearly 2-point drag. Excluding net gains from our equity investments of $7 million, non-GAAP non-operating income was $79 million, benefiting from higher interest income due to rising rates. Our GAAP tax rate was 16.9%, and non-GAAP was 17%, due to a tax benefit related to the extension of the U.S. foreign tax credit regulations, which resulted in an indirect tax expense in the operating expense line and a much larger tax benefit in the income tax provision. GAAP EPS was $2.27. Non-GAAP EPS was $2.33, up 21% over last year, inclusive of a little more than half a point of drag from exchange rates. In Q4, we bought back approximately $4.1 billion in stock and distributed $928 million in dividends to our stockholders.
Whatever happens here in these Microsoft earnings, it's going to shake around this whole market. And keep in mind, folks, Microsoft's market cap is almost $2.5 trillion. Well, technically, if we price in an after-hours move, it's over $2.5 trillion. So based upon what happens in this conference call it's about to start, it's about to shake things in a massive way. This is going to be interesting. Microsoft, does your technology not work?
And welcome to the Microsoft Fiscal Year 2024 First Quarter Earnings Conference Call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation.
Probably.
If anyone should require operator assistance during the conference, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. I would now like to turn the call over to your host, Brett Iverson, Vice President of Investor Relations. Mr. Iverson, please go ahead.
Good afternoon, and thank you for joining us today. On the call with me are Satya Nadella, Chairman and Chief Executive Officer, Amy Hood, Chief Financial Officer, Alice Jolla, Chief Accounting Officer, and Keith Dolliver, Corporate Secretary and Deputy General Counsel. On the Microsoft Investor Relations website, you can find our earnings press release and financial summary slide deck, which is intended to supplement our prepared remarks during today's call and provides a reconciliation of differences between GAAP and non-GAAP financial measures. More detailed Outlook slides will be available on the Microsoft Investor Relations website when we provide Outlook commentary on today's call. Microsoft completed the acquisition of Activision Blizzard on October 13th, 2023. We will share more on the expected impact of the Activision acquisition during the Outlook commentary portion of today's call. On this call, we will discuss certain non-GAAP items. The non-GAAP financial measures provided should not be considered as a substitute for or superior to the measures of financial performance prepared in accordance with GAAP. They are included as additional clarifying items to aid investors in further understanding the company's first quarter performance, in addition to the impact these items and events have on the financial results. All growth comparisons we make on the call today relate to the corresponding period of last year.
Hey, folks, breaking news. Bill Gates' daughter just broke up with her boyfriend, okay? So any youngins out there that are like, you know, in your 20s right now, I think she's 22, 24. I think she's about to finish college here. So, hey, Bill Gates' daughter's out there, folks.
Immediately following the call until the complete transcript is
Had
available.
the bag and fumbled.
Today's call is being webcast live and recorded. If you ask a question, it will be included in our live transmission, in the transcript, and in any future use of the recording. You can replay the call and view the transcript on the Microsoft Investor Relations website. During this call, we will be making forward-looking statements, which are predictions, projections, or other statements about future events. These statements are based on current expectations and assumptions that are subject to risks and uncertainties. Actual results could materially differ because of factors discussed in today's earnings press release, in the comments made during this conference call, and in the risk factors section of our Form 10-K, Forms 10-Q, and other reports and filings with the Securities and Exchange Commission. We do not undertake any duty to update any forward-looking statement. And with that, I'll turn the call over to Satya.
Thank you, Brett. We are off to a strong start to the fiscal year, driven by the continued strength of Microsoft Cloud, which surpassed $31.8 billion in quarterly revenue, up 24%. With Copilots, we are making the age of AI real for people and businesses everywhere. We are rapidly infusing AI across every layer of the tech stack and for every role in business process to drive productivity gains for our customers. Now I'll highlight examples of our progress, starting with infrastructure. Azure again took share as organizations bring their workloads to our cloud. We have the most comprehensive cloud footprint with more than 60 data center regions worldwide, as well as the best AI infrastructure for both training and inference. And we also have our AI services deployed in more regions than any other cloud provider. This quarter, we announced the general availability of our next-generation H100 virtual machines. Azure AI provides access to best-in-class frontier models from OpenAI and open-source models, including our own, as well as from Meta and Hugging Face, which customers can use to build their own AI apps while meeting specific cost, latency, and performance needs. Because of our overall differentiation, more than 18,000 organizations now use Azure OpenAI service, including new to Azure customers. And we are expanding our reach with digital-first companies with OpenAI APIs, as leading AI startups use OpenAI to power their AI solutions, therefore making them Azure customers as well. We continue to see more cloud migrations with Azure Arc. We are meeting customers where they are, helping them run apps across on-prem, edge, and multi-cloud environments. We now have 21,000 Arc customers, up 140% year over year. We are the only other cloud provider to run Oracle's database services, making it simpler for customers to migrate their on-prem Oracle databases to our cloud. Customers like PepsiCo and Vodafone will have access to a seamless, fully integrated experience for deploying, managing, and using Oracle database instances on Azure. And we are the cloud of choice for customers' SAP workloads too. Companies like Brother Industries, Haynes, Zeiss, and ZF Group all run SAP on Azure. Now on to data. In the age of copilots, organizations are looking to consolidate their data estates. That's why with our Microsoft Intelligent Data Platform, we're bringing together operational data stores, analytics, and governance. More than 73% of the Fortune 1000 use 3 or more of our data solutions today. And with Microsoft Fabric, we're unifying compute, storage, and governance into one end-to-end analytics solution with an all-inclusive business model. More than 16,000 customers are actively using Fabric, including over 50% of the Fortune 500. Now on to developers. With GitHub Copilot, we are increasing developer productivity by up to 55% while helping them stay in the flow and bringing the joy back to coding. We have over 1 million paid Copilot users, and more than 37,000 organizations have subscribed to Copilot for Business, up 40% quarter over quarter, with significant traction outside the United States. This quarter, we added new capabilities with GitHub Copilot Chat, which are already being used by both digital natives like Shopify, as well as leading enterprises like Maersk and PwC to supercharge the productivity of their software developers. All up, the number of developers using GitHub has increased 4x since our acquisition 5 years ago. We've also brought Copilot to Power Platform, enabling anyone to use natural language to create apps, build virtual agents, and analyze data. More than 126,000 organizations, including 3M, Equinor, Lumen Technologies, Nationwide, PG&E, and Toyota, have all used Copilot and Power Platform to date. EY, for example, has enabled Copilot for all 170,000 plus Power Platform users at the company. And this quarter, we added new Copilot capabilities to Power Pages, making it possible to build data-driven websites using just a few sentences or clicks. Finally, Power Apps remains the market leader in low-code, no-code development, now with 20 million monthly active users, up 40% year over year. Now on to business applications. All up, Dynamics 365 took share for the 10th consecutive quarter. We're using this AI inflection point to redefine our role in business applications. We're becoming the Copilot-led business process transformation layer on top of existing CRM systems like Salesforce. For example, our Sales Copilot helps sellers at more than 15,000 organizations, including Rockwell Automation, Sandvik, Coromant, Securitas, and Teleperformance, personalize customer interactions based on data from third-party CRM.
We do want to get to some headlines that we're getting from the Microsoft call. The CEO saying they have over 1 million paid GitHub Copilot users. More than 37,000 organizations are subscribed, and over 18,000 organizations use Azure OpenAI service. We are seeing the stock still hang on to that almost 4% gain in the after-hour session. We're up 13 minutes into the conference call. We will keep you posted on that front. Meantime, coming up, it's been a volatile time for the markets. How should you navigate these?
Alrighty, folks, that's going to pretty much wrap it up for me for the day. Obviously, Microsoft's call is still going on, so if you guys want to listen to that one, go listen to that one. Tomorrow's obviously huge. We'll listen to the entire Meta conference call live tomorrow. Obviously, since it's my biggest stock I own, we're going to listen to every single minute of that call. And then on Thursday, we're going to, obviously, it's a crazy day for earnings on Thursday, but we will listen to every single minute of the Amazon conference call. That is my number, I think, 3 biggest investment in the public account. Appreciate everybody joining me as always. Thanks so much, folks. Thanks for being here. Much love, and see you on the main channel later tonight. Peace.